Welcome back everyone to the Audacious Money Witch channel where we talk about the magic behind the stock market. If you have been watching my channel recently, I posted two videos about Celsius and Pepsi stocks. Yes, I bought both. I bought Pepsi stock at 143 and I bought Celsius stock at 22 to 24 range. The reason I want to own Pepsi stock is inspired by Warren Buffett's Coke 10% stake in Berkshire's portfolio. You know, for the dividend and safety, but I also want growth in hyper stock like performance to accelerate my portfolio growth.
Has Wall Street finally lost its appetite for the energy drink stocks? I mean, here's a group that's had some stunning performance over the last 20 years. You think Alphabet's up big from its 2004 IPO with that 7,890% gain? Man, if you bought Hanson Natural, which is the company that became Monster Beverage at the same time, you'd now be up more than 24,000%. Meanwhile, in just the last 4 years, Celsius has rallied more than 4,700%. These things have been incredible winners.
And I also resonate with the Celsius brand marketing. I know a strong brand when I see one in the Pepsi fridge. So I decided to take the risk and invest deep into Celsius as the stock kept falling. I kept buying because Celsius stock will bounce back and reach my set target price once the stock reported Q4 numbers. In this video, I will go over the earnings. How was the organic growth? I will explain why the stock jumped over 30%. How big is this Celsius story? Is it just getting started? Are we ready to take on monsters soon? Before we get into the game-changing story of Celsius, let me set the scene, give you some highly relevant macro details that is very important for a consumer brand like Celsius.
The hottest part of the market in beverages for so long, growing double digits, but I feel like they've hit a speed bump lately. What are you seeing from the consumer?
When you look at the consumer, you're hearing from retailers, low-end and middle-class consumers starting to feel the pinch. Could be the gas pump.
What the cause of the slowdown is it? Is it a challenged consumer at the low end? Is it just tough comps because it was so strong before?
When you look at, interest rates as well, credit cards, fees, I think there's a lot of pressure on the consumers these days, especially food prices.
The world's largest retailer, Walmart, warned that 2025 would be a roller coaster ride and said it expected sales to slow this year amid fears that consumers are tapped out. The sour forecast from Walmart dragged down the Dow by more than 650 points, or 1.5%. Walmart stock closed with a loss of 6.5% as investors fear a slowdown in consumer spending, which makes up 2/3 of the economy as shoppers pull back in the face of even higher prices. Retail sales plunged 0.9% last month as shoppers reined in their spending across multiple categories. That was sharply down from December's total and well below economists' expectations. So what is Celsius Holdings? It's a global company, offers functional fitness drinks through development, processing, marketing, and sales. Celsius as a fitness drink that shows clinical evidence of speeding up metabolism and burning body fat when combined with physical exercise. The company operates worldwide but generates the majority of its revenue from domestic markets. The company maintains its distribution network with PepsiCo across multiple channels such as retail stores and e-commerce platforms, along with fitness centers and gyms. Meanwhile, in the macro land, Americans' inflation expectations for the year ahead surged this month to the highest level since November 2023, according to the University of Michigan's latest survey. And consumer sentiment plunged. So that explained why, for the 2024 full year, Celsius total revenue increased only 3%, and in the Q4, the revenue actually declined 4.4% to $332 million. That's a growth stock that is stalling. Overall, energy drink sales have been climbing, but Celsius's growth has slowed over the past year. According to Nielsen IQ data, I might be too harsh on Celsius's organic growth. The company posted quarterly earnings and sales that came ahead of Wall Street expectations. Yes, a double beats, but no one wanted to see this sales decline except for short sellers. So how do we get over 30% pop in the stock price? Because the brilliance of the Celsius management team, they obviously know the trend is slowing, so they did something massive. The earnings results came just minutes after the company announced that it would acquire rival Alani Nu, another growing energy drink brand fueled by social media influencers, for $1.8 billion, comprising a mix of cash and stock. The smaller Alani Nu, meanwhile, has made some of the biggest market share gains in energy drinks. Founded in 2018 by fitness influencer Katie Hearn, Alani Nu sells energy drinks, supplements, and protein drinks. The Louisville, Kentucky company was built its brand largely through partnerships with influencers such as Kim Kardashian, Paris Hilton, and singer Addison Rae. We believe we have the right strategy to drive sustained, long-term growth, and we expect that the acquisition of Alani Nu will further strengthen Celsius' position as an innovative leader in the large, growing global energy category, said Celsius CEO John Fieldly. The acquisition offers a compelling strategic, rational, and strong financial benefits, said CFO Jared Langhans. We believe our capital allocation strategy is fully aligned with our vision to be a high-growth leader and deliver the greatest value to our consumers and shareholders. The deal would add a fast-growing brand to Celsius' suite of products as its own growth has been slowing, and give Alani Nu even more marketing power. Celsius and Alani Nu both have pitched themselves as fitness aids and have developed a following of young women. Purchasing Alani would help Celsius move into supplements and snacks. I think a more important theme is after the deal, Celsius will own the majority of shares of the female energy drink market. Katie Snyder, co-founder of Alani Nu, commented, "When we founded Alani Nu in 2018, our goal was simple: to create products that made women feel their absolute best, inside and out." Watching this brand grow into a movement of strong, confident women has been the honor of a lifetime. As Alani Nu enters this next chapter with Celsius, I have full confidence that they are the best partner to enhance Alani Nu's growth and success while staying true to what makes it so special. Alani Nu dollar share for the same last 4-week period was 4.8%, an increase of 200 basis points from the prior year period. With the addition of Alani Nu, the combined Celsius platform is expected to drive $2 billion in sales. The transaction is expected to enhance Celsius' position as an innovative leader in the large growing global energy category, which is projected to grow at a 10% CAGR from 2024 to 2029. I listened to the conference call. Celsius CEO said Alani is basically like Celsius 2 years ago. So I think this deal is crucial for the revenue growth of Celsius moving forward. It firmly solidified Celsius brand the third biggest place in the energy drink market, and someday it might be able to challenge the monster. Because as more and more women are drinking Celsius and Alani, their scale will be growing bigger, and that will create more economy of scale advantage to take on the monster. How does the deal affect us shareholders? Is it a good deal? The purchase price consideration is comprised of $1.3 billion in cash and $500 million, or approximately 22.5 million shares of newly issued restricted shares of Celsius common stock, representing approximately 8.7% pro forma ownership. The cash consideration consists of fully committed debt financing of $900 million and approximately $375 million of cash on hand. The company's liquidity position is expected to remain robust and ample cash on the balance sheet. The deal represents attractive valuation of less than 3x Alani Nu 2024 actual revenue of $595 million, so it's actually cheaper than Celsius stock at $25 as the price to sales ratio is over 4x. To be honest, I love the branding of Alani, and before today I was kind of worried about Alani as a fierce competition to Celsius, but I guess the Celsius management thought the same thing and did something about it, and for that I am grateful. Thank you for letting us own such great brands. I think the combined company will become a wonderful company for years to come. Another huge reason why the stock was flying over 30% after Celsius stock already shot up nearly 15% on Wednesday when the company announced that it would report earnings the very next day. I think the Celsius management is trying to squeeze the short sellers. They are getting too greedy and complacent in their shorts. They were completely caught off guard as the company double surprised them with this M&A deal. If there is no deal, just based on the double beats, the stock wouldn't bounce this big. For Q4 of 2024, the energy drink maker posted net sales of $332.2 million and earnings of 14 cents per share. Analysts had expected $328 million and 11 cents, respectively. Based on the stock chart of Celsius, we are due for a bounce to my target. Due to the stock has reached the 0.618 Fibonacci support level. My target is $40 a share. I think it's very achievable target after this 30% move. Can you see the magic of the stock market yet? I think this move is a win-win for the shareholders of Celsius and Alani Nutrition because rather than fight each other off, they stick together and become a stronger company together. I am glad I took the risk and jumped in Celsius. I can't wait to see what happens next. I would love to hear if you have tried Celsius drink and what you think about it in the comments below.